traders, and welcome to the advanced video for the Ichimoku Cloud trading series. So if you haven't seen my first video on the Ichimoku Cloud, I recommend you go check that out just to start. This was the Patreon suggested video, and I got a lot of questions on this and a lot of comments. So what I'm going to be doing today is looking at a few different ways to look at the Ichimoku Cloud. We're also going to be adding on to our analysis of part 1 and also answering some common questions that I got in the comment section of part 1. So to recap, we talked about in the beginner's guide to the Ichimoku Cloud, trend direction and looking for trend reversals. So that's really here. We looked at entry and exit and the rules that we take for entry and exit with the conversion line, the baseline, and also the Ichimoku Cloud turning from green to red or red to green. And finally, we also looked at support and resistance. So here, where we had support, and so on. And we're going to be adding on to these three and also adding in more volatility metrics when we're using the Ichimoku Cloud. These are the settings that I use for the cloud. Of course, you can use any settings you want, but I find that this helps the most with a 24/7 crypto market. Cloud size. So this is a topic I don't think I covered at all in my beginner video. And this is really looking at the height of the cloud or the lack of height of the cloud. So we know that the height of the cloud is going to reveal the volatility and the price fluctuation of the market. So when you see a very, very thin cloud like this, you know that the midpoint of the last periods is likely not changing much. So this was very thin because you can see that there's really not much price change. The midpoint, just kind of stays here. And what we're also looking at is when the cloud is very, very wide, we know that a trend is likely, the trend is likely strong. And the trend is likely making higher and higher highs when we get an expanded Ichimoku green cloud. And the downtrend is likely making lower and lower lows when we get an expanded red Ichimoku cloud. And not only does this reveal the price fluctuations of the trend and the lack of price fluctuations here, but it also tells us something about volatility. And we know that when volatility is very low, so something like this, that a new trend is likely to emerge. And we know that when volatility is very, very high, that there may begin to be a period of low volatility. And that's just really volatility 101. There's a constant cycle of volatility where periods of rapid price action are going to lead to periods of really not much rapid price action. It's just going to continue again and again. So what we're looking at for that is, there's a lot of ways we can trade volatility. And not just options and that like directly trading volatility, but some traders with the crypto market like to trade low volatility. Some traders like to trade high volatility. But no matter what trader you are, really looking at when is price in a period of low volatility and when is price in a period of high volatility is still very important. Also, we can talk about the size of the cloud and how that leads to strong support and resistance. So large cloud size is going to lead to very strong support and very strong resistance. A very thin cloud, so a cloud that's been moving on very low volatility, is probably not going to be acting as very strong support or very strong resistance. So an example here, we have a very wide cloud here, a very tall cloud, and we had support. Then we got this cloud here that began to be, widen. We found resistance. We found resistance here. The cloud began to really widen here to almost a maximum. I think just as high as it was here. We got resistance here and resistance here. And then again, we got resistance here. But you may notice that when the Ichimoku cloud gets very thin, that price isn't really anywhere near it. Or price just isn't going to be treating it as support or resistance. So here, price just really isn't going to be doing much with that cloud. So the bottom line is when the Ichimoku cloud gets very thin and price actually does approach that level, we don't expect that very thin Ichimoku cloud is going to hold as very strong support or very strong resistance. But when we get a price period like this, where there's a massive amount of this cloud's gotten very, very wide like this, then we expect that this is going to begin to hold as very strong resistance or as very strong support. And finally, we also can look at price in cloud. So typically the price is not going to be in the cloud, but when price is trading in a period of a more thin cloud or a cloud that's not as tall, that's typically just going to mean consolidation. So to show that here, you can see that when the cloud got very thin, we began to see more consolidation. Cloud's thin here, very thin here, and we begin to see more just consolidation. Not really strong support, not really strong resistance where prices, bouncing off this, creating strong support. Really no resistance or support here. This is just all consolidation on a weak cloud, as you can see on a very thin cloud. And that's really the takeaway from this, is we need to wait for those Ichimoku clouds here to here to really get much wider. And when the Ichimoku cloud gets very wide, then this begins to become resistance here. But then when you see the price entering the Ichimoku cloud like this, just expect to see a little bit more of consolidation and low volatility. So there we've covered consolidation, price ranging, and we've also looked at high and low volatility and using the cloud to interpret that. Now, again, like I had said before, there are many different ways that you can add volatility into any kind of trading method. It just depends on if you want to trade low volatility, high volatility, or a mix of both. It's all preference. No, golden rule to trading with volatility. In the beginner video, I did not talk at all about the lagging span. This is that fifth part of the Ichimoku cloud that I just didn't want to talk about because it's typically not talked about as much. What this is it's just price, but it's price 30 periods in the past with my settings. So if we look here, or let's look at this one, we can see that this is the current price that we have. I just took this screenshot about an hour ago. And 30 periods in the past, you can see that where the arrow is pointing to, that green line is the lagging span. How do we use this? Some people use it as support and resistance. Some others use it as a price cross. So when price crosses the lagging span, the way that I found it really most helpful, if helpful at all, is the lagging span can show you how choppy price is. So this isn't really so much looking at volatility. This isn't really so much looking at price consolidating. But price choppiness is something a little bit different. And when we get a large amount of price interaction with the lagging span, we know that price is very choppy. But when we get price just not touching the lagging span at all, we know that price is not that choppy. So if we look here, we can see that price has not been touching the lagging span. It was touching it here, and it was touching it here, and it was touching it here. It was not touching it here. But when price isn't touching the lagging span at all here, that means that price is likely in a strong trend. And price did continue to go down, as you can see here. But on the flip side, when we go back into this one, when we go back into this one here, when we go back in this one, we can see periods where currently right now where the arrow is pointing to, price is touching the lagging span. So we really are that means that we're in a choppy market right now. And that the market's probably going to remain choppy until a strong trend emerges. And you can see other elements of this in the past where there's a period of time where price isn't touching the lagging span at all. That's where you get a very, very clean trend. But then when the lagging span, and then here as well, you can see, but then when the lagging span really begins to touch price like it does here and here and here, that's when you get more of choppiness. And you can see the choppiness here. Price is touching the lagging span, you got, we went up, then we went down, and then we went back up, and then we went here. Really not much trend there, just kind of stop hunting and hitting stop losses of retail traders mostly. But then when the lagging span began to just distance itself from price, that's when we begin to get more of a clean trend, retracement, trend, and then to this trend here. So that is the way that I like to use the lagging span. Of course, there are many other ways that you can use it, but I find that it can be very helpful with looking at choppiness. Also, I covered fibs, volume, and RSI with confluence of the beginner video. With this video, the other indicators that you can use as well are ADX, stochastics, MACD, money flow index, and the commodity channel index as well. So down here, I have the ADX, also known as the DMI, directional movement indicator. And what this is showing us is here we see currently a period, we had good support here. We had a wide cloud and strong support. And we have a bit more of a thin cloud here. And imagine that we were at this point in time, just about here. Now what we see is we still have a green cloud, so we're still looking to buy. And then we have the ADX. We can see that the ADX crosses above the threshold. And we see that we have a green DI above a red DI. This is just indicating us that we probably want to buy into the uptrend. And what we want to do is look at the ADX. It says bullish, you should buy. And we look at the Ichimoku cloud, and it looks bullish, and it says that we should buy as well. And if we had bought around here, we would have been able to cover, we would have bought at 71, and we would have been able to cover a little bit more of a nicer profit. Of course, with any indicator, especially the Ichimoku cloud, I'd recommend using secondary indicators as well. And that's why I gave an example of the ADX here. If you want something a little bit simpler, you could just do MFI, or you could just do a MACD or stochastic. These are two very simple indicators. And this is just an overbought, oversold indicator that takes into account volume. So that could be a good a good addition to the Ichimoku cloud, because the cloud doesn't have anything to do with volume. So you could balance out the Ichimoku cloud with the money flow index and look for oversold and overbought levels, and then use that with a green or red cloud. Okay, so we've looked at cloud size and looking at that with volatility. We've looked at the lagging span, and we looked at ways of confluence with the Ichimoku cloud as well. Now let's take a live look at the Ichimoku cloud and put it into practice. So just to show you guys again, we know that, let me get this one set up. The lagging span is in green, so that's that green line there. The blue line is the conversion line, and the brown line is the baseline. And I disabled lead 1 and lead 2. I mean, you can have it there if you want, but it's really, the plot background is already there. So, I don't always like to see it there. It's much more clear this way. All right, so now let's take a live look and see. This is August 26th. Just going to take a minute or two look at the Ichimoku cloud in action. So right here we have a projected Ichimoku cloud that looks to be potential resistance here. We have more of a wide cloud, so I'm expecting that this level might be able to hold as resistance or support. If price is able to go down to here, it could react as support. And it looks like we did have support right there. We had price went down there, made a tail at the Ichimoku cloud, and bounced right back off. Looks like we're in a period of bullish growth, so I'm expecting that to continue. Looks good. Also, you can see that the lagging span that we just talked about is not touching price, so I'm not expecting much choppiness. This looks like a very clean trend as of now. Now I'm beginning to see the lagging span touching price. So that happened right there. I think, right about there is when we had lagging span intersect with price. And now we're beginning to see a little bit more of choppiness, as you can see. But let's see if this support holds, or if the Ichimoku cloud support does not hold. So this support looks like it has held, and you can see the price goes back up and continues to go higher. You can see the Ichimoku cloud has stayed green. It has not turned red at all, so I'm still expecting that this is just the uptrend and that this was just support within the uptrend and a very wide cloud, so this all makes sense. Now we have a bit more of a thin cloud, so that if price does come down here, I'm expecting it to just rip right through. And we can see here that price does just rip right past. I mean, it happens very, very quickly. We did have a bit more of a wide cloud, but luckily for us, price didn't rest here, so we wouldn't mistakenly think that was support. Price just went through the entire cloud here. And then you can see that we begin to get more of a bearish cloud. So here I'm just talking about the cloud and the lagging span, but also the the baseline and the conversion line. We can see the crossover of those two as well. And I think we got a conversion line baseline crossover right here, right after these candles. So this may have been a time to exit along or to aggressively think about shorting, if we had thought of that. So yeah, that's just a quick look at the Ichimoku cloud. I would recommend to use in higher time frames. That's another question that I gotten. I like using on the 1 hour. I like using on the 1 day. I like using on the 4 hour. You could try the 5 minute. If we look at the 5 minute right now, it is doable. But I just find that it's not as helpful with the 5-minute as it is with the 1 hour, because it's a little bit more choppy and unclear, as you can see here, kind of all over the place. Okay, that is going to be it for the advanced look at the Ichimoku cloud. If you have any questions about volatility, about cloud size, cloud height, or the lagging span and how that interacts with price, feel free to leave a comment below or to private message me on the Discord. Thanks for watching and happy trading.